Welcome to the first in a series of short videos that have been created to give you an insight into what's involved in becoming a successful stock market trader. I'm Jeff Bryant from Home Trader, one of Australia's leading providers of stock market education. Over the next 12 episodes, I'll be covering the key requirements for a profitable trading strategy. This includes understanding the difference between trading and investing, and how to use risk management to protect your capital by minimising your losses and maximising your profits. We will also be looking at when and how to buy shares, making sure you not only buy the right stocks, but buy them at the right time. Getting out of trades is even more important. We'll look at how to pick your exit points so you lock in profits and avoid selling too early. As we go along, we'll be looking at a variety of different trading strategies, including trend following, mean reversion, rotational trading and short selling. We'll also look at the tools of trading, how to read charts, back testing, how to use CFDs to leverage your cash. So let's start with the basics. When we own a stock, what do we want to see happen? Obviously, we want the price to go up. I call this the prime criterion. Simple, of course. Well, we'll see. Okay, most people are investors. Their strategy involves buying shares and holding onto them for the long haul, hoping they'll go up in value while picking up some dividends along the way. The trader is different. We conduct our business over much shorter time frames. Now for the investor, the overriding concern is security. This is why people tend to buy what are referred to as blue chip stocks. People who bought Bond Corporation shares wanted that sense of security, as did those who bought Quintex and HIH. Similarly, Pasminco, OneTel, Sons of Gwalia, Ion, HWE, the list goes on. What have all these companies got in common? They all went to the wall. Shares held in these companies, worthless. So much for that sense of security. HIH is a good example. Things were great for a while, then crunch. This brings us to the second key difference between investors and traders. As traders, we say no. The trader has a plan to sell, an exit strategy. We much prefer to get out somewhere up around here rather than get caught hanging on to a dud like this one. While the poor old investor is stuck hanging on and hoping, all we have to do is listen to what the market is telling us, and we'll know what to do and when to do it. In this case, we simply let go, cut our loss, and move on. So, why do people trade? Well, the reasons can vary considerably, but the bottom line doesn't. We're looking for better returns. Better than what? Better than bank interest, the average investor, the average fund, superannuation, real estate, or simply better than you're getting now. So how can trading give us better returns? The average investor just gets average market returns, and the magnitude of these returns depends on the time frame used. But the best compound rate the average investor could claim over recent decades would be if they started in the early 80s and at just over 8% per annum, their return is hardly spectacular. In fact, it's about the average rule of thumb for real estate. As traders, our exit strategy gets us out of the way of poor markets like 2002-03 and of course 2008. And so by avoiding the big losses, our average returns can be higher. I'd like to close this session with a quick look at the market in general. Two things are immediately apparent. Firstly, it does not move in a straight line. It goes up and it goes down. Obvious perhaps, but something we'll come back to later on. Secondly, driven by macroeconomic factors, the long-term trend is up. The market has never failed to make new highs, and we believe, despite the global correction in 2008, it will again lift to new levels. So now would be a good time to prepare for the next recovery. Alright, we've learned that investing and trading are different, and that the trader is looking for better returns. In the next episode, we'll be looking at why it is absolutely vital to have a sound trading strategy. Of course, if you'd rather not wait, you can visit our website at hometrader.com.au and book into one of our free information seminars. That's it for now. I'll see you next time.